Hello and welcome back to Chairman's Briefing. This edition is brought to you by Exploits Discovery. I'm Rachel Lee. Let's get started. Now, gold's recent slide below the key $2,600 level and its 50-day moving average has market watchers on edge, but bulls aren't throwing in the towel just yet. Some analysts are pointing to what could be a classic bear trap developing in the precious metals market. Simply put, a bear trap is when sellers pile in expecting further downside, only to get caught off guard by a swift price reversal. Think of it like this. Just as a physical trap lures its target with false promises, a bear trap in the gold market might be doing the same to pessimistic traders. With many investors positioned for further weakness after the break below 2,600, any upside surprise could force these bearish bets to unwind quickly, potentially fueling an even stronger recovery in gold prices. Recent weakness in the metal was compounded after Fed Chair Jerome Powell stated that he's in no rush to move rates lower given the remarkably good performance of the economy. But despite the potential for the slower pace of rate cuts, there are numerous compelling factors that continue to support this market's outlook. Some analysts are of the view that gold especially stands to benefit under a Trump presidency as higher inflation, tax cuts, and larger budget deficits are a lock. John Reed, who is chief market strategist for the World Gold Council, stated in a recent webinar hosted by BMO Capital Markets that it wouldn't have mattered who'd won. Quote, "We weren't going to see the deficit come under control. The risks are probably that they will be higher under Trump with the tax cuts that will probably follow in the near term." Reed also said that gold's appeal as a hedge against debt and economic uncertainty is likely to persist, even as investor sentiment responds to changing fiscal and monetary policies. Despite gold's wobble, Goldman Sachs isn't backing down from its bullish outlook. The investment bank is standing firm on its $3,000 per ounce target for gold by the end of 2025, even as prices stabilize around 2,600. Yes, political shifts have triggered some profit-taking, but Goldman points to two major drivers that could push gold to new heights: steady central bank buying and potential ETF flows once the Fed starts cutting rates. The bank's analysts highlight that global central banks continue to diversify away from the US dollar, with America's mounting debt potentially accelerating this trend. Now, looking ahead, Goldman suggests that escalating trade tensions could reignite speculative interest in gold, even as markets digest the implications of potential America First policies. Senior gold producers are showing early signs of stabilization after a brutal month of selling pressure. Now, following their multi-year peaks in March, these mining giants took a significant hit, but appear to be finding their footing after briefly testing the 200-day moving average support level. Though this price action is positive, it remains to be seen if this is a genuine recovery or simply a temporary reprieve. As always in the mining sector, the direction of gold prices will dictate future price trajectory. NexGen Energy has hit a crucial milestone in developing its flagship Rook I Uranium Project in Saskatchewan's Athabasca Basin, moving one step closer to breaking ground. The project holds nearly 240 million pounds of uranium at a grade of 2.4% and has now cleared its final federal technical review. With provincial approval already secured and over $800 million in the Treasury, NexGen awaits just one more major hurdle: a federal commission hearing expected in early 2025. CEO Leigh Currier emphasizes that the company stands ready to begin major site work immediately following approval, potentially as early as the second quarter of 2025. Exploits Discovery has kicked off its fourth drilling campaign at its Bullseye gold property near Gander, Newfoundland, building on previous success that included notable intercepts such as 67.5 grams per ton gold over 3.3 meters. Working with Major Drilling Group, the company is breaking new ground by testing the previously undrilled western section of the Appleton Fault Zone. Now, this follows the discovery of 2 new gold zones called Horseshoe and Saddle from earlier drilling campaigns. Now, the program will focus particularly on expanding the high-grade Saddle zone, where previous results suggest significant potential for additional gold-bearing structures. Orla Mining has struck a deal worth $850 million with Newmont to acquire the Musselwhite gold mine in Ontario, Canada. This strategic acquisition is set to more than double Orla's annual gold production to approximately 300,000 ounces. Musselwhite brings impressive credentials to the table: a 25-year production history of nearly 6 million ounces, current reserves of 1.5 million ounces at a robust grade of 6.23 grams per ton, and significant exploration potential across its 65,000-hectare property. Now, the deal structure includes an $810 million upfront payment to Newmont, with 2 additional $20 million payments tied to gold price milestones. Adding intrigue to the transaction is mining legend Pierre Lassonde's significant stake in Orla, holding 10.1% of the company's shares. Following our coverage last week of i-80 Gold's challenging transition from developer to producer, some new updates are turning heads. Despite the stock taking a significant hit amid concerns over the company's future, management appears to be sending a strong signal to the market through substantial insider buying. Recent regulatory filings show key company insiders actively purchasing shares at current prices, sparking cautious optimism among some investors. However, the timing is particularly challenging as the junior mining sector enters its traditional tax loss selling season, adding another layer of pressure to the company's share price. The coming weeks should prove crucial for i-80 as it navigates both its operational challenges and seasonal market headwinds. Shares of American Pacific Mining rallied Monday as the company secured full ownership of its Palmer VMS project in Alaska through a strategic agreement with Dowa Metals and Mining. Under the deal, Dowa will pay $10 million for the right to purchase up to half of the project's future zinc concentrate. The deal consolidates American Pacific's control of the Palmer project, a substantial zinc-rich deposit that contains 4.7 million tons of indicated resources at 10.2% zinc equivalent, plus 9.6 million tons in the inferred category at 8.9% zinc equivalent. Canterra Minerals has hit impressive mineralization right from surface at its Buchan's project in Newfoundland, sending the company's shares higher. The standout intersection returned 60 meters grading 2.25% copper equivalent, including a richer zone of 3.17% copper equivalent over 26 meters. Now, these results carry special significance given Buchan's storied past. From 1935 to 1981, this historic mine produced over 16 million tons of exceptionally high-grade ore. Today, it stands as the most advanced critical minerals project in central Newfoundland. With drilling costs running at just $200 per meter, Canterra can efficiently expand its drilling program at Lundberg, currently the largest copper-zinc-lead deposit in central Newfoundland. These cost-effective results will feed directly into an updated resource estimate, potentially expanding the deposit's already significant footprint. Russia is temporarily limiting exports of enriched uranium to the U.S., creating potential supply risks to utilities operating American reactors that generate almost a fifth of the nation's electricity. While most 2024 deliveries are secure, market experts are warning of potential supply challenges starting in 2025. The U.S., with just one commercial enrichment facility in New Mexico, finds itself particularly vulnerable. Though the Biden administration has initiated efforts to revive domestic enrichment capabilities, these plans are still in early stages. The market's reaction was fast, with uranium miners like Cameco surging up to 6%, while Centrus Energy, a major trader of Russian uranium, saw its shares drop as much as 13%. This development highlights the complex relationship between energy security and geopolitical tensions. Australia's Sayona Mining and US-based Piedmont Lithium are joining forces in a $623 million all-stock merger, aiming to create North America's largest hard rock lithium producer. The deal consolidates ownership of their Quebec-based NAL project and strengthens their position in the North American EV supply chain. Under the agreement, Sayona will become the parent company, with shareholders from both firms holding roughly equal stakes. The merger comes at a critical time for NAL, which has faced challenges since beginning production in mid-2023, despite supply agreements with major players like Tesla and LG Chem. This consolidation follows a broader trend in the lithium sector as companies adapt to market challenges while positioning for future growth. The deal is expected to close in the first half of 2025, pending shareholder approval. Trump's transition team is planning to eliminate the $7,500 consumer tax credit for EV purchases as part of a broader tax reform legislation. Tesla, America's largest EV manufacturer, has reportedly expressed support for ending the subsidy. CEO Elon Musk has previously suggested that while the move might slightly impact Tesla's sales, it could severely affect competitors like General Motors. Repealing the subsidy, which has been a signature measure of President Joe Biden's Inflation Reduction Act, is being discussed in meetings by an energy policy transition team led by billionaire oilman Harold Hamm and North Dakota Governor Doug Burgum. Gold Fields is weighing potential sales of its smaller mines in Ghana and Peru as the South African gold producer shifts focus to its new Salares Norte mine in Chile, purchased recently from Osisko Mining. CEO Mike Fraser revealed that the company is exploring the sale of its Damang mine in Ghana, which is currently processing stockpiled ore, and the Cerro Corona operation in Peru, which has about 5 years of mine life remaining. Before any potential sale, the company aims to enhance these assets' value by exploring for new mineral discoveries. And that's a wrap for this briefing. If you've made it this far, hit the subscribe button and leave a thought or two on what you thought of this episode. Thanks for being a part of Chairman's. We'll see you next week.